Tulsian is with me. Mr. Tulsian, refining looks like has beaten all the estimates.
In fact, Anuj, if you really see, I think petchem and refinery both has really beaten, because if you take the petchem EBIT of 2,504 crore and similarly refinery of 3,174 crore, because if you really see, it was 2,951 sequentially. So in fact, there has been a jump of about maybe 200 crore on refinery, and there is a jump of about 600 crore in petchem. So definitely petchem is the star performer, but even the refinery has contributed.
In fact, you'll soon have the flash on the petchem EBITDA margin, 10% versus 8.6% quarter on quarter. I don't recall when the last time we had 10% margin on petchem. This looks like a very strong number on petchem.
Very strong numbers, because actually you see petchem always have the price discovery on import parity prices. And we all know that rupee has corrected, but even I think taking that also into account, the currency difference and the good demand of the, I don't think that this was really expected. So yes, very robust performance for this.
Prayesh Jain is also with us. Let's get a quick call from him as well. Prayesh, hi. I mean, what's your first comment on the number? Because it looks like both on refining and petchem, they've managed to beat the street estimate. What's your call?
Yeah, it's better than our estimate. We were expecting the PAT to be around 5,380 crores. So it's ahead of our expectations, and rightly so. The petchem is definitely a surprise here, with a bit of around 2,500 crores against 2,500 crores against our expectation of somewhere around 2,200 crores. So it's a 300 crore beat there. And even in the refining side, there is a substantial beat in terms of margins. So I think so. It's a overall beat in terms of earnings.
It is. So, Prayesh, do you think you have reason enough to maybe upgrade the stock, or at least the stock will see a bit of a positive reaction? Would that be your call, or do you think that would be too simplistic right now?
See, on the current numbers, definitely the stock will react positively tomorrow. And in case of, in terms of building in upsides into our numbers, there would be minor upsides to our earning estimates for the full year, not major.
Well, I tell you what, last quarter we quite clearly said that operationally the numbers didn't look good. This time we have to say that operationally numbers look good. Look at the other income. It's 2,060 crores versus 2,535 crores quarter on quarter. So quite clearly, this is a number which is coming from operational parameters, both on petchem and on refining. This is not a number which has been shored up by other income. It doesn't look like they would have the kind of treasury gains as well that they would have booked in quarter one. Mr. Tulsian, any word on other income? 2,060 crores, I think, versus 2,500 crores quarter on quarter.
No, if you really see the interest income of 1,551 crore, I think they had about maybe more than 2,100 crore in the previous quarter, taking that treasury, which they've shown in the other unallocable income. And even if you add that, it is 1,600 crore, so that means there is a drop of about 500 crore. And in spite of that, in fact, 500 crore drop in the interest income, or maybe the treasury income got vastly offsetted by this petchem and refinery. So yes, in fact, I think market really wants to look these kind of numbers, because you must have your profit coming in from your core operations and not from the finance.
Indeed. And you know what, $7.7 is the gross refining margin that we have. That's the source-based information that we have at this point in time, which is pretty much in line with the market expectation, $7.8. Mr. Tulsian, what would have led to this? I mean, apart from currency depreciation, which can add maybe 7 to 8%, as we were discussing in the break, what would have led to this refining performance as well?
See, Anuj, if you really try to collate the correlate the figures, now take the GRM of $7.7. That means they had 8.4 in the first quarter. There is a drop of 70 cents. Even if you take the exchange gain of about maybe 7 to 8% and you reduce it by maybe 70 cents on the gross refining margin, sometimes it is very difficult to accept that you had a bit of 2,951 crore in Q1, and now with practically the drop of GRM and increase in the currency, both are getting offset with each other. So at least the number should have been constant at 2,950 crore, but we are seeing an increase of about 200 crore. So I am unable to connect this, that how this has really happened.
Prayesh, will you have an answer to that? I mean, the GRM is down. Yes, there is currency depreciation, what would have led to this jump of about 200 crores quarter on quarter in refining EBIT?
Difficult to make a make a guess here.
No, so what was the number that you were working with for refining?
In terms of GRM, $7.7. So it's bang in line with the expectation, but the EBIT is much ahead of what we were expecting. So,
okay, so what was your EBIT expectation, Piyush?
EBIT, our expectation in terms of EBIT, refining EBIT was around 2,800 crores kind of number.
Okay, yeah, so that's where...
Now here, just let me add a point. We have to see the crude also, how much they have processed, because I have calculated that at 109% with a crude processing of 17 million metric ton. Suppose if you find that, okay, the plant has operated at 113, 114, 115, there is a quantity increase, maybe beyond 17 million ton, having processed in that quarter, then probably, one can have that answer that, okay, 200 crore is acceptable. So either there has to be an increase in the capacity, because as I've calculated at 109% capacity utilization, as I said. So one has to really watch for the crude throughput having processed by the refinery also in this quarter.
Okay, Narendra Taneja is also with us, who's an oil and gas expert. Mr. Taneja, hi, good evening. We're all wondering where this beat on refining would have come from, because the GRM is $7.7. What would be your guess?
Well, my guess is, I think again the sourcing. I mean, they've been very successful in placing some crude sourcing agreement with certain countries, and they basically got the advantage of that. And the way some of these deals have been engineered, and the way basically concluded that they, in a way, they've been free from the kind of fluctuations and the kind of anxieties we have seen, for instance, over Syria. The last 3 months, of course, Syria kept the oil and gas industry literally at the edge. But I think in a way they managed to insulate themselves just by having the kind of agreement, particularly with two suppliers, one in Africa and the other in Latin America. And of course, these are confidential information. They don't need to share that with SEBI or others. So I think that's probably have helped them. And at the same time, again, there's similar contracts, not of the same size, but similar contract in terms of supply of petroleum products. Again, they have done very well there. So if you look at the overall picture, the way crude has been sourced, and at the same time the way petroleum products have been exported, not necessarily to the end user but to certain consortiums, and they in turn have been selling it to the end users. So I think if you look at the way they have been extremely innovative, if you look at Reliance and GRM margin, for instance, where the beat, even the biggies of the world, is the way, for instance, they innovate, and they innovate in some cases almost instantly, and they innovate in a way that even the Western big oil companies sometimes really are forced to really understand, forced to basically get into the study mode to understand that how Reliance actually works. So I think basically these are the kind of things which very often most people don't have access to, because how these things are done, how these deals are internally structured. I'm not referring only to the sourcing of crude. I'm also referring to actually this, petroleum products marketing, selling petroleum products. So I think that's where basically the secret lies. And what is the secret? I know many of these things, but I think these are the secrets that only Reliance can tell you if they want to.